Hi again, grade 10s. So just the second part now of journals. We are still using the new era textbook, page 161 to 162, where your task 5.24, where you're supposed to do ledger interpretations. So now let's just do quickly creditors control. So this is what you were given in creditors control, and you must just fill in the blanks. So like I said, you're not going to have to fill in the amount, so don't worry about that. But what I want you to know now is the rest of the details. So the creditors control is a liability. So it increases on the credit and decreases on the debit. So the opening balance will definitely be on the credit because unless otherwise stated, opening balances are always an increase. Then after that, let's go now down. The next thing now, we are going to have, let's start with the debit side. So when they say bank CPJ 5475, what would have happened if we've got an amount in the CPJ? Very simple, we would have made a payment. So if it comes like this and it says CPJ, you must always know that you are supposed to write bank. Or if it comes here bank and there's nothing here, you know that it's CPJ because money is going out to pay our liabilities. So that's what that's how this one works. And then what else would be in the CPJ? Just like in the debtors control, also in the CPJ is when they give us a discount. So what is the name of the discount that they give us? The discount that we give them is called discount allowed. We allow them. And the discount that we are given is discount received because we received it. So this one will definitely be discount received. It's going to be discount received. So those are the two things that you will get in and CPJ. And then in CAJ, it will be everything that, so what happens in the CAJ? So everything that you returned. So everything that you returned. So I'm going to, you can open the CJ now so that you can be with me, but I'm looking at the columns of the CJ, creditors ledger. The first one will be creditors control. Then you can return trading stock. So the CJ is normally the same as the CJ. CAJ is the same as the CJ because what you bought is the only things that you can return. You can't return anything else. So you might as well have the same columns. So CAJ will have trading stock, equipment, not wages. You can never return wages, but anything you bought that you can retain. Vehicles will be there in the sundry accounts. What else? Stationery. So all those things that are returnable. So all those things, you cannot list them here. So what do you list instead? I mean, what do you write instead to accommodate everything? So you can just say total returns. So this one will be total returns. So everything that you retain. But this is a common one that we've been using, but it can be total allowances as well. But don't worry about that. We are going to just work with total returns. And then, so that's it on the side. And then on the side, we've got this one. So they use, can you see things can be named differently? So they use sundry accounts, but I want to change this word to total purchases. This is what I taught you, but it's the same thing. Total purchase. So you can even in your pages when you're doing this, just change it to total purchases. So you can call it total purchases or you can call it sundry accounts. So if it's total purchases, I'm sure you know now where to put it. That's right. If it's a creditors control, it's what you bought on credit, not on cash. And where do you record things you bought on credit? It can only be CJ. So CJ will be on the credit because it's increasing the liability because you're buying more. And CJ will be on the debit because it's decreasing the liability because you're returning. So you don't owe them anymore. The amount you're going to have to work backwards, which you shouldn't worry about. Don't worry about working backwards, like I said. And then now, also here, we have the same things. So I'm going to just copy and paste this. We've got the same thing here. We've got the same thing as we have in the debtors control. We've got general debits and general credit, but then these work around the other way around. If we are charging, if there is a charge of interest, we are being charged interest. So it's going to be interest expense here. In here, we are charging them interest, so it will be interest income. So if they ask, what would what would have happened here. So then you can say, though, so on the credit side, then it would be an interest expense because an expense increases our liability. So any could be an interest expense, interest charged on our account, or it could be errors. This side, it could be errors. Bad debts don't come here, they go to debtors control because there's people who owe us money. So it can either be if you credited someone's amount, so it will be correction of error, removing it from the other account to putting it in the other account, or it could be being charged interest. So if they ask you what would be the reason for this, then you can say interest expense, or you can say errors. Otherwise, that's about it. I'm not going to worry about the balance carried down, balance brought down, because then it's coming from the amount that you don't have. This one will be 270. If you want to do it on your own, this one is 270. And this one is 12,960. Then you can now just balance. I'm not going to write anything here because this was just now for me to teach you. Otherwise, that is it. That's what I'm going to teach you now about the ledger interpretations, debtors control and debtors and creditors control. For now, that's it. I'll teach you we can talk about the other ones at a later stage. Thank you guys for listening. Let's chat again. Bye.